Generally speaking, you would make a lot, if you do a good job with it, you would make a lot more rate of return on real estate.
Hey there, welcome back to Cash Baggy Channel. In today's discussion, I'll explore Dave Ramsey's preference for real estate as a potentially more lucrative investment than the stock market. Without any delay, let's begin deciding which one will make you more money, guided by Dave Ramsey's insights.
Zero hassle factor buying a mutual fund or buying stocks, unless you're going to try to buy and sell them, which I would never recommend. But a buy and hold strategy on real estate, while it generates cash flow.
Dave Ramsey raises some valid points when comparing real estate and the stock market as investment options. His perspective highlights the trade-offs between the two, and it's essential to consider these factors when making investment decisions. First, he emphasizes the convenience and minimal hassle of investing in mutual funds or stocks. These financial instruments are relatively easy to manage, especially if you adopt a buy and hold strategy. The ability to receive statements electronically and monitor your investments with minimal involvement is undoubtedly appealing. On the other hand, Ramsey acknowledges that real estate, while potentially more profitable, comes with its share of complexities. The real estate market is characterized as an imperfect market, meaning that there is no uniform information or equal access to buying and selling properties. Each property is unique and tied to a specific location, making it challenging to compare and evaluate investments. This uniqueness can be a double-edged sword, offering opportunities for those willing to put in the effort to research and find bargains. Still, it also demands more time and involvement. Indeed, let's break down the key factors to consider when deciding between real estate and the stock market to determine which one aligns better with your financial goals and preferences. Number 1. Investment goals. When considering your investment goals, both real estate and the stock market present distinct advantages and disadvantages, allowing you to tailor your choice to your personal preferences and financial objectives. Suppose you want to generate passive income through rental properties or capitalize on property appreciation. In that case, real estate can be an attractive option. On the other hand, if you focus on long-term growth, liquidity, and the ease of diversifying your portfolio, the stock market provides opportunities for capital appreciation. Your decision should align with your financial goals and risk tolerance, as both avenues offer benefits and challenges. Assess your investment horizon and income needs to determine which option aligns best with your financial strategy.
Okay, so an IRR on a piece of real estate that is under $1 million, a small apartment, a small a basic home, a small office or something like that, your IRRs ought to be north of 15%.
Number 2. Risk tolerance. Dave Ramsey acknowledges the risk tolerance of both markets being artificially high at times, citing the tech bubble in 1999 as an example. However, he suggests that, with a sound long-term investment approach, both real estate and stocks can yield significant returns. The key is to focus on fundamentals and avoid being swayed by market hype or short-term fluctuations. When evaluating your risk tolerance, it's important to consider the distinct characteristics of each investment option. Real estate typically requires a larger upfront capital investment, is less liquid, and can be strongly influenced by local market conditions. This means that the value of your real estate holdings may fluctuate based on factors specific to the area where your properties are located, such as job opportunities, economic growth, and local supply and demand. On the other hand, the stock market offers greater liquidity, allowing you to buy and sell assets more easily. However, it is also susceptible to market volatility, which means that stock prices can experience sharp fluctuations over the short term. To align your risk tolerance with your chosen investment, you should account for the potential for these short-term price swings in stocks. Ultimately, your comfort with risk should guide your investment decisions when choosing between real estate and stocks. it's important to assess your own financial goals, risk tolerance, and investment horizons before making a decision. Some investors may find real estate a better fit due to its stability. In contrast, others may prefer the potential for higher returns in the stock market despite its higher short-term risk. Your choice should reflect your unique financial situation and objectives.
And if you're willing to invest the time, you should make more on it. Real estate creates three types of return. One is, as you said, increase in value, and cash flow is two, which is the rental income on it. And three is you get to depreciate it. So you actually get a tax break that covers a portion or all of your rent that comes in.
Number 3, time horizon. When weighing the merits of real estate and the stock market as investment options, the distinction in time horizons comes into focus. Real estate investments often require a longer-term commitment, as substantial returns are typically realized over time, mainly through property appreciation. While the stock market offers flexibility for short-term financial goals, its real power lies in long-term investing and harnessing the compounding effect over time. Your choice should align with your preferences and specific financial objectives, as both avenues have their unique advantages and disadvantages. Number 4, diversification. Diversification plays out differently in real estate and the stock market. In real estate, diversification usually entails spreading your investments across different types of properties or diverse geographical locations. This strategy effectively distributes risk among various assets, reducing exposure to potential losses tied to a specific property or location. On the other hand, the stock market offers a more accessible avenue. You can invest in a range of sectors or asset classes, such as technology, healthcare, or consumer goods, among others. This allows you to create a well-balanced portfolio that spans a wider economic spectrum. By investing in stocks from various sectors, you can mitigate the risk associated with the performance of any single industry or company. Determining the best choice for diversification depends on your financial goals, risk tolerance, and investment horizon. Both options offer diversification benefits, but the choice ultimately hinges on your circumstances and preferences. Number 5, expertise and involvement. Real estate demands a hands-on approach, encompassing property maintenance and tenant management. On the other hand, the stock market provides a more passive avenue where you can entrust your investments to professional fund managers or opt for a self-directed approach. Ramsey's advice emphasizes the importance of matching your decision to your comfort level and the level of engagement you are prepared to dedicate to your investments. He wisely said, "The objective isn't merely greater wealth, it's achieving financial peace of mind." In his perspective, having the requisite expertise and involvement in managing your finances is crucial for not only accumulating greater wealth, but more importantly, attaining lasting financial peace of mind. Your choice between real estate and the stock market should be guided by your willingness to actively participate in managing your investments and your comfort level with the responsibilities each option entails. Number 6, tax considerations. When examining the aspect of tax considerations, real estate presents appealing features like depreciation deductions and 1031 exchanges, which can potentially yield tax benefits. Meanwhile, the stock market offers its own advantages, including favorable capital gains tax rates and the option to leverage tax-advantaged accounts such as IRAs or 401k. As Ramsey said, personal finance is 80% behavior and 20% head knowledge. Your financial behavior and long-term goals should heavily influence your decision between real estate and the stock market. Consider your risk tolerance, investment horizon, and whether you prefer the tangible nature of real estate to the liquidity and diversity of the stock market.
Just because, when I was a boy, that piece of property sold for, 100 times less does not mean that it's not worth that today, just because I can't emotionally keep up with the prices.
Number 7, market conditions, which is a critical factor when comparing real estate and the stock market. Dave Ramsey highlights that his childhood memories of a property selling for a fraction of today's price shouldn't cloud our judgment about its current value. He highlighted the importance of relying on mathematical analysis rather than emotional reactions. Regarding real estate, it's crucial to recognize that local real estate markets can exhibit significant variations. Therefore, diligent research and a deep understanding of the dynamics in your target area are essential to making informed decisions. Conversely, the stock market operates broader, influenced by a complex web of economic and global factors. It's subject to market cycles that can be challenging to predict. Ramsey's perspective underscores the need to consider these dynamics carefully when deciding between real estate and stock investments. Furthermore, as you navigate the complex terrain of investment decisions, remember that your financial objectives may evolve. Regularly reassess your investment strategy and make the necessary adjustments to stay on track. Remember, building wealth is not just about amassing assets, it's about securing your financial well-being and achieving peace of mind. By seeking a harmonious balance between real estate and the stock market, you can mitigate risks and take advantage of opportunities, ultimately ensuring a more stable and prosperous financial future. On this journey, patience and discipline are your allies. The choices you make today will pave the way for a brighter tomorrow. So, embrace the possibilities, consult with a financial advisor, and delve into thorough research. These steps are the building blocks of a well-informed decision that will harmonize perfectly with your distinctive circumstances and dreams. Your financial journey holds great promise. Thank you for watching. Feel free to share your insights in the comment section below. Remember to hit the subscribe button to access additional informative content here on Cash Baggy channel, and stay tuned for my forthcoming videos. Happy investing!